Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer-term market outlook on Bitcoin through the lens of the US dollar currency index DXY. We talk about this because the two assets have a very clear inverse correlation. And with DXY, we have basically retesting multi-month lows, retesting a key level of support, and potentially a breakdown after losing this parabolic advance that we had throughout 2022 and 2021. If you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, please do leave any of your comments, video recommendations, or suggestions down below. Now, with this specific inverse correlation, we did talk about this about 5 months ago on the channel when Bitcoin was approximately 17K. And we said, hey, well, look, the DXY, the US dollar currency index, had just completed this major run up where it had a very aggressive parabola, and then it started to break down, and we saw how that was a very clear topping signal, which with the inverse correlation was also a very clear bottoming signal for Bitcoin. So looking back here at the chart again, the top on the US dollar currency index was back here in October of 2022. That's when Bitcoin was approximately, in this 20K range right before that FTX crash. So you can see how that more or less corresponded to a local bottom on Bitcoin and a local top on the US dollar currency index. The same was exactly true here on the top when Bitcoin peaked in November of 2021 as well as April of 2021. These two peaks marked the bottoms for the US dollar currency index again all the way back here in 2021, just before it had that parabolic advance. Again, very clear inverse correlation. We had that big leg up while Bitcoin experienced that bear market. Now, the reason we're bringing this up, and if you want to get a little bit more information on that inverse correlation, especially through the other cycles, I will leave a link to that video 5 months ago down in the description below. It does have a lot of good information that is still very valid today, but now we're going to talk about what to expect in the future now that we are seeing that very clear decline in the US dollar currency index. Now that we have from this local high at 114 come down by about 11% or so, you can really start to see how that parabola move has ended, and now we're in this declining phase. So DXY is coming up and retesting 101.3, a key low from back here in May of 2022. And this was also the low in the support from January, beginning of this year. And now we just have a few more retests coming down for the third time to retest this as support. Now, the reason I bring this up is because there is a very likely chance in the next few months we do see DXY start to break down, and this is no longer holding as support. So for example, if DXY starts to make lower lows, multi-month lows, and lose this as support, you could really see how we could continue that bear market decline, continue this downtrend to some of these lower valuations, for example, down here in 2021 towards the 97 level, and then potentially all the way back down to sort of this base at 94. And if this were to happen, if I zoom out here and we do see more or less a pretty significant retrace of this massive leg up, again, looking back at Bitcoin, that really gives us the room and the opportunity to retrace this massive bear market. So to the upside, that would mean coming up to 40 or even 50K in the event that the US dollar currency index does continue to trend down, does continue to break down, and ultimately just give back all of this rally that it had in 2021 and 2022. So that's sort of where I stand with the US dollar currency index. Although that is true, it does look weak today, we're still at support, and this is still support until proven otherwise. So once again, zooming back in here to the last few weeks, it is still holding the weekly candles above this. It is still holding the support technically. Though it does look weak, it hasn't broken down yet. So we can't really start to look down to those downside targets until we do get confirmation, which again, confirmation would mean multiple weekly candles closing under this as resistance. And the same is true for Bitcoin if we have confirmation of a breakout. So for example, if we can reclaim the 30 to 32K resistance and have confirmation to the upside, you can see how, again, it's very clear inverse correlation. If we can have something like this confirming a breakout to the upside, a lot of the signs are aligning to which we could have a further and extended rally up to that 40 to 50K zone. But again, while those are certainly possibilities, we haven't seen any confirmation yet. Bitcoin is still below resistance, and this is resistance until proven otherwise, and DXY is still above support, which is support until proven otherwise. So watching out for the DXY is going to be something very key into the next few months, but there is certainly nothing actionable yet just because we're just at a very key inflection point on both DXY and Bitcoin. There is a scenario where maybe we don't break down immediately and instead we have a few months, maybe we have another rally, maybe another bounce, and then potentially just really stretching out an inevitable breakdown. This would be the case to which Bitcoin doesn't immediately break out and it still has some difficulties reclaiming the resistance at 30 to 32K. So for example, we might consolidate here, maybe a drop back down, retesting some support, or eventually just giving a little bit more of consolidation before an eventual breakout. Both I think are very viable options. What I don't think is going to happen, and this is just because of the weakness in DXY, the weakness in this most recent last few months, especially after a parabola move, I don't think we're going to see this reverse and then come back and just completely take out some of these lower highs and go back into yet another uptrend. I don't think this is going to happen just because, again, of all the weakness. For example, looking here at just a 20-week moving average as an example, this is actually one of the best examples we can look to because it's such a good indicator of where the trend is. So if we just toggle on the 20-week moving average, you can see, again, during the bull market, it was very consistently averaging up higher. It was support, price was reacting off of it, and then you have the breakdown, the moving average starting to trend back down, and now it's at resistance. So this is just one of the indicators that you can look to for the longer term trend. Pretty much the inverse of Bitcoin. Again, if I look here at another moving average, just a 20-week moving average, you can see the exact same thing, but to the opposite side. So if we look here at the 20-week moving average, you can see, again, resistance. That's where we rejected at back here in October, resistance here in March, but now it's acting as support with the bounce back here in March of 2023 acting as support. It's moving back upwards, and it's just such a very clear correlation, but reversed. So bearish on the DXY is a good sign for crypto, and I think that it is very logical to be bearish here. It is very logical to see this weakness, to see maybe a potential bounce to the 20-week and then rejecting, to see maybe some consolidation before eventually breaking down. But all signs for me point towards lower and a continuation. So that's why I think this is very bullish for crypto, especially with Bitcoin. And I think that we could see, again, that inverse correlation where that is a positive aspect for Bitcoin, and we could continue to rally up to the 40K or even 50K region. I hope you guys enjoyed the content and the analysis, and as always, I'll see you in the next one.